Guys, I found a very similar pattern that is forming right now. You see this, how this S&P 500 price is following up, holding this dark blue and this purple line right here. So as soon as that dark blue and purple line got broken as support, this confirmed a 50% pullback for the S&P 500. And right now, we're seeing here that as long as the S&P 500 stays above this dark blue and purple line, it is good news at this moment. But as soon as that dark blue and that purple line gets broken, this will most likely lead into a 50% pullback. And you can see that this move is very similar right here. This massive uptrend right here, and then right here it is very similar right here. Like, so in today's video we're going to be talking about what are the potential scenarios for the S&P 500. This is a part 4 for the SHMITA update. We're going to be talking about, is the S&P 500 repeating the same pattern before a 50% pullback? The dead cat bounce bottom strategy update. Realistically, what is the worst case scenario for the S&P 500? 68% pullback. And we're gonna also use the unemployment rate, inflation rate, and total lunar eclipse. So guys, I'm not going to be talking about in today's video about the inflation rate and the total lunar eclipse, because right now it is not marked the total lunar eclipses right now, and that will take a lot of time because it goes more than 100 years. So in this video, I'm going to be talking about all of what you're seeing here in this quick note, but the exceptions will be the inflation rate and the total lunar eclipse. But no worries about that, guys. Keep enjoying this YouTube video, guys, and maybe in the future I'm going to cover that inflation rate and that total lunar eclipse in regards of the overall markets. So yeah, guys, keep enjoying this YouTube video, guys. To determine this in the S&P 500, in the Nasdaq, Dow Jones, and also we're going to be talking about the total cryptocurrency market right here also, because it's very important, and we're gonna also talk about the DXY. But starting out here, guys, beautiful crypto solution supporters, if you're interested in having more help in regards of cryptocurrency and exact step-by-step of what I'm doing in a day-by-day basis in the cryptocurrency market and how to look at it in a far more efficient way, I have a 50% off membership in my Patreon link in the description below, where mostly it consists on me investing in almost a day-by-day basis. You get to see what I'm buying, what I'm selling, with exact prices and a lifetime. It includes the short-term, mid-term, and long-term plays. Also, you get to see the consistent trading opportunities for many different cryptocurrencies. Out of all the patterns and trading opportunities, which ones I'm trading and which ones I'm not trading, and the ones I'm looking to trade in the future. Consistent technical analysis for Bitcoin, Ethereum, Cardano, XRP, Chainlink, etc., and specific altcoins you would like for me to do technical analysis. And also questions about cryptocurrency and economy in general. I can help you answer almost any questions about those topics. Also, a crypto portfolio investment review. In summary, reviewing the whole portfolio. So click here for more in regards of the specifics and how it works in my Patreon link in the description below. This sale will only last until this Monday, which will be November 28, 2022. And you get this first month for 50% off. Thank you so much, guys, and let's keep going, guys. Hello, guys, and welcome to Crypto Solutions, here to help you make the best decisions in cryptocurrency and in cryptocurrency technical analysis. Today's S&P 500 technical analysis YouTube video, guys. And this is the SHMITA update part 4. I'm gonna update you guys on what I'm seeing here. There's a very interesting scenarios happening right here, which I'm going to cover in today's video. So if you're new to my channel, like I said before, we cover realistically the overall economy, mostly cryptocurrencies, and we also use the stock market because to some extent it is still tied to the stock market. But in here we distinguish ourselves by using far profound evidence than usually most technical analysis use. We combine here total lunar eclipses, we use different types of indicators right here, Fibonacci retracements, patterns, and also in the future we're gonna be talking about the Wyckoff distribution schematics, because those are also a good, very good tool. So welcome. Leave a like, comment, and share this YouTube video, guys. Remember, thank you so much for your support in the last videos before. It has really gotten a very good support. So keep liking, commenting, and sharing this YouTube video, guys. I really appreciate it. And share this with people that you relate to in regards of this specific niche, like cryptocurrencies, stock. Like, this is a very important video also, because this will be an update here. So for the SHMITA and what's to come in the short-term, mid-term, and long-term right here. So let's get started here, guys. So first, guys, we're seeing here in the monthly time frame using the moving averages right here. You can see that we're gonna focus here. This one's over here. We're gonna ignore at the meantime this one's over here. So first, as I mentioned, starting out the video, guys, you can see that this was around August 2, 1982. So as soon as that huge monthly body candle close above that dark blue and purple line, it started this massive uptrend, which took the S&P 500 from around $108 all the way up to this top of around $1,552. Okay, so this is a very good observation, because right here this massive uptrend was being carried all the way up to this top, as long as it stayed above this dark blue and this purple line right here. And by the way, that dark blue is the 50 simple moving average in the monthly time frame, and this purple line is the 55 simple moving average in the monthly time frame. And as soon as that support got broken using the moving averages right here, you see here it held right there. It showed weakness because it wicked below that 2 times, rebound, and then rejected by that yellow line, which is the 8 simple moving average, and then eventually massive pullback. And if you measure how much of a pullback from the top right here, this was all the way down around a 50% pullback. And also looking at this as it is, look at this very straight line, and it is very drastic because this is the monthly time frame. it's a large time frame, so having this big movements in monthly time frames, usually when it's time to pull back, it's gonna pull back very hard, even if it's the stock market in that case. And here, this is a very interesting scenario, because you can see a very similar upturn, massive upturn right here. This one was bigger than the one we're experiencing right now. This was a bigger one, but it is still very similar, because you can see right here massive uptrend in the monthly time frame. And so I'm gonna show you guys here as soon as that monthly candle close above that dark blue and purple line, boom, you see an uptrend to the upside very drastically. And as I showed you before, look at this uptrend here, support, and now it held support, it bounced right here, but this was a quick one right here. So here, what are you going to expect right now? What is the S&P 500 going to do right here? So this, like I mentioned before, this red box, rectangle, this marks the start of the SHMITA and the end of the SHMITA. And so right now, using this, as long as the S&P 500 stays above this dark blue and this purple line, so yeah, as long as the S&P 500 stays above this dark blue and purple line, this will remain still as I continue to an upside, okay? But since this is the SHMITA right now, this is like the beginning of the aftermath of the SHMITA. So usually the SHMITA effect, which is the pullback, usually happens after the SHMITA. So right now we're on that stage, okay? So this is looking from here like a dead cat bounce scenario. So right now, guys, I'm gonna show you guys here in the daily time frame what I mean by that. Okay, so we're going to turn off this moving averages right here. Just a second here. Okay, and as you can see right here, guys, I drew this to verify if these patterns were legit right here. And it was following up very nicely, broke out, didn't complete the target, the falling wedge. Retested this, held support, bounce again. But I'm gonna delete those because I'm gonna see this using Fibonacci retracements right here, using the S&P 500. From what I'm seeing here, at least using the S&P 500, it is better to use mostly Fibonacci retracements at this moment. So, and also the moving averages. So to better follow the market right here. So come on. Okay, so right here, I'm gonna show you guys the Fibonacci retracement. So first, you can see right here that this dead cat bounce scenarios are following up very good right here. Look at this one. So as I mentioned before, what is a dead cat bounce scenario? So the dead cat bounce scenario, how it works is that using the Fibonacci retracement, which is this indicator, you put a top here and then a bottom here, and then it gives you these lines over here, and you look for that 0.5, which would be 50%, 0.5. And so usually after a massive pullback, it will usually bounce around that Fibonacci retracement, around that 0.618 and that 0.65 Fibonacci retracements usually, and then it's going to decide if it's going to get rejected here and head lower, or if it's going to keep holding support here and keep going higher. So that's the scenario. So usually the dead cat bounce, usually it means that it's going to go down. So how do you determine that? And you go here and you watch the price. So after you pull the Fibonacci retracements and after the bounce, a quickly tip. So here, if you see a massive bounce like this, you should, and also as fast as it did right here, usually it almost every single time ends up being a dead cat bounce scenario, because when you do this quickly, that's usually a bearish sign most of the times. Not every single time, most of the time. So here, guys, the strategy is to not get rejected on this 0.5. Yes, it can go a little bit higher, like to this, but sometimes it likes to get rejected here and then keep going lower. And sometimes a little bit higher, but it leads to the same effect. So yeah, guys, here we have one dead cat bounce scenario. After rejection around the 0.5 and 0.618 and the 0.65. And after that, if it can't hold the 0.236, usually that will lead to this lower low, which will be lower than this one. So yeah, that's one dead cat bounce. So, and then you go over here and you watch for this second dead cat bounce scenario, which will be using that same one, but using this new low. And as you can see, did the same thing. Bounce again and rejected exactly there. Try to hold here, and after that loss of that support, boom, lower low. That's a second dead cat bounce scenario. So that's why this is very important. So here, that's the second one, okay? 2 dead cat bounce scenarios right there. And now we're gonna go here and use, let's say here, this one over here, from this top to this low. And look at that, the same thing over and over again. Pullback, rejection exactly, that's 0.6, 0.5, and that's 0.618, 0.65. And then if it can't hold that 0.23 sets, lower lows. That's 3 dead cat bounce scenarios in the daily time frame. So there's 3. And now this will be the next one potentially right here. This will be the 4th one right here in the short term there. And here you're seeing here, just a second here, okay? You're seeing here in the S&P 500, the same story. Pullback, bounce, and now it's trying to hold that as support. But this is looking like a bearish divergence when you use the RSI. And that's another indicator, but in summary, let's see here. Just a second, guys. Let's see here. Oh, it's not there. Just a second here, guys. Yes, it's here, guys. So yes, let's see here. Well, this one, okay, so no, this is not, wait. No, this is not bearish divergence at this moment. Okay, so yeah, I wanted to watch out for that. So right now, this is holding as support at the time of this video, which will be today, Saturday, November 26th, 2022. So here, you're seeing that. So as long as it stays above this 0.3 sets, then it will be a good thing. But usually after a rejection here, and if it comes back here, it is very likely it's going to break it. Not guarantee, but the high likely scenario that's going to be. So here, that's what I'm seeing right now, using in the short term and midterm in the S&P 500 right here. So using here, guys. Okay, so personally, I'm expecting a rejection right here because still there's more downside for so many reasons. It's just, this is too vertical of a price action. This has to have a 50% correction, and not percentage wise in this case, but this movement, half of that movement has to at least be retested before going higher. That's how usually price action goes in almost any good stock and almost any good cryptocurrency. So how do you determine that? For example, let's say here, to be exact, this from this low to this high. What I mean by at least half of this movement, I mean this 0.5 at least. This will be the Fibonacci retracement, but in reverse, okay? And it also works in reverse. So here, I'm expecting at least minimum more rejection right here and go back to this 0.5 Fibonacci retracement around this $3,250 right there. So, and that would be from where it is now to there, around a 19% pullback, around 20% pullback. But from the all-time highs, it will be a completion of, let's see here, 32%, which is still, I'm expecting lower, and I'm gonna show you why. So right now, that would be one of the most key details right now, and it also makes sense for this 0.5 because of this range, horizontal resistances and support right here, like this one right here. This will make a lot of sense because of this top right here. And yeah, I'm expecting that 0.5 Fibonacci retracement right there. That's personally what I'm expecting. It doesn't have to happen all the time, but I have seen this so many times, which I'm very convinced that this is going to most likely happen. So that's my perspective on it. So right now, unless it doesn't break that 0.23 sets, then this will just keep going higher at this moment. But I'm expecting more downside because of this massive movement, which has to be corrected. At least half of this movement. That's how it usually works. That's how it works. I'm gonna show you guys. So let's see here. Wait, I'm gonna delete that. I'm gonna leave it there. I'm gonna leave that if you want to trace from there. Okay. So as long, looking at the lower highs here, look at this. Lower high, potentially a lower high right here, and then continuation to the downside. Lower lows here, lower lows here. Lower highs, lower lows, bearish trend. So I'm expecting for this to go something like around this range and boom, keep going lower. Okay, that's what I'm personally expecting. Let's see here. So let's see here. This, as long as it stays up, if it wants to do a complete reversal, like for example, for this, let's say this is the bottom, and to complete that bottom, then the price has to do something like this to do a higher high than this one, and that would potentially be a scenario where this is having a complete change of trend, which will be from the bear market side to the potential bull side, because it's creating a new higher high. That will be the bullish scenario if it happens, but I'm personally expecting lower high right here and then here. Okay, that's my perspective, but as long as it doesn't do something like this, I will remain I will still remain conservative, but this will be still a bearish trend. Okay, so here, guys. Okay, so the dead cat bounce scenario, guys. I'm gonna show you guys that in this time frame. Okay, so this is the dot-com bubble. Okay, dot-com bubble. So here in the previous video, or in the one before, in the SHMITA updates, one of those videos, I mentioned that this bottom was formed after around 3 dead cat bounces, and this one, the 2008 market crisis, market crisis, it formed 5 dead cat bounce scenarios before it hit that bottom. And right now, looking at this one, this already formed 3 dead cat bounce scenarios. Okay, so potentially there's 2 more to come, or maybe 1 more, or this will be the last one. Hey, so 3 to 5 at this moment, but I'm gonna verify something here, guys. So yes, this dead cat bounce scenarios was on the weekly time frame. I'm gonna quickly go up here so you can see. So this will be, let's say, this will be 1. You see it right here. The same as I showed you before. Pullback, rejection here, no lower low. This is the weekly time frame. Here, go here, and boom, and boom, and the same. Pullback, rejection here, boom, lower low. That's a second dead cat bounce scenario. And let's see here. This will be a third one right here. Here. Did boom, and here. I can show you guys. Watch out. Boom, pullback, rejection, and lower low. Those were 3 dead cat bounce scenarios. This is the weekly time frame. So I'm gonna verify here and this one in the weekly time frame. Okay, 1 dead cat bounce scenario will be this one. Let's see here. This one. 1, like I showed you guys before. Boom, boom, rejection, lower low, boom. 1, that's 1. And now this will be the second one. If you pull it right here, that will be the second one, and boom, the same, boom, boom, lower low. Second dead cat bounce scenario. And looking at this one, let's say here, I'm gonna verify this one just a second here. And if this is a dead cat bounce, yes, this is also another dead cat bounce scenario right here. And it's very subtle here, but it didn't reach the 0.5, but I will count it because it attempted to go to the 0.5. That's a very rare case scenario where the price doesn't reach that 0.5 and still completes the dead cat bounce scenario. Most of the times that doesn't happen, but it counts. So let's see here. That would be a third one, and this would be the fourth one right here. This will be the fourth. Let's see here. Boom. And boom. Fourth one. So this will be the potential fifth one if it's using this fifth that fifth dead cat bounce scenario, which I'm expecting it's gonna roll over again. Okay, rejection here and a new lower low. So looking at the 2000, let's say house market crisis right here. Let's see here. So we have here 5 dead cat bounce scenarios. Wow, that's a lot. Let's see here quickly, guys. This is one. Boom, the same. Just it doesn't fail, guys. That's what I'm saying. This is very, very important. Boom, rejection, new lower low. And boom, the same here. Let's see here. And let's see here. From here, let's see here, from this high to this one right here, and the same thing, guys, doesn't fail. Boom, boom, and second dead cat bounce. Let's see here, this one, let's see if it counts as a dead cat bounce. This will be third one. Yes, this counts. And boom, 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 new lower low. That would be a third one over here. Here, let's see. There, okay, just a second. From here, let's say from this wick to here, that is a dead cat bounce. Boom, boom, and boom. Fourth one. And the fifth one, it is this one I'm gonna show you guys, is this initial one. It is very short right here, but this is also a dead cat bounce here. This one here and here, and the same. Boom, boom, lower low. 5 dead cat bounces in the weekly time frame. So like I said, guys, this is very consistent, so that's why you have to watch out. So okay, guys, I'm gonna show you another scenario right here. So in summary, you're seeing here, this was 3 dead cat bounces. This one is 5 dead cat bounces. And remember, guys, this will mark the bottom right here for the .com bubble, and here will mark the bottom for that housing market crisis. This already has 4 dead cat bounce scenarios. But at the same time, this has more downside, because if you measured here the percentage pullback, 50% here in the .com bubble right here, and the housing market crisis here, 57%. Okay, so personally, I'm expecting a 50% pullback. I would say between 40 to 50% minimum. Okay, that's the minimum I'm seeing here because of the drastic uptrend, and also especially the massive pump of money, which was mostly debt and not true value. So that's another big reason why. So I'm gonna show you some fractals quickly here, guys. Okay, guys, so this is very interesting. You see both fractals. I'm gonna put it in yellow so you can see it better right here. I'm gonna put it quickly yellow here. Boom. And the opacity right here. This one yellow, and this would be boom, opacity. So this is very interesting, guys, because this will be the fractals from here and here. So you see this massive movement. This one will be this one, and this one will be this one. So this is very interesting, guys, because if it were to do the same scenario, then this will take the price in the worst case scenario in regards of this housing market crisis, this fractal, only that one, will take it around here, around $2,388 for the S&P 500. And this one will be right here. But it's very interesting because it's moving very similarly to the .com bubble in this case. And it's a very interesting scenario. So if it were to do the same move here, percentage wise will be different, because you go here to here, that would be a 43%. And if you go from this one to here, this will be a 50% pullback. But if you measure those same moves over here, then this one is 50%, 50%, and here will be a 57%. So it changes because of where you're putting that same pullback movement, which will be different in percentage wise the higher you put it above here. So yeah, those are the scenarios right there. I wanted to show you guys that also because I found it very interesting right there. It is following up, or that's very very closely. And so guys, I already talked about point number 1, point number 2, and now point number 3 will be realistically what is the worst case scenario for the S&P 500. 68% pullback. So I will say this right now. So this is the worst case scenario for the S&P 500 if it were to do that. I'm not saying that it's going to happen, but this will be the worst if it were to happen. So I've already mentioned this before. Using this simple moving averages right here, you can see right here that this red line, this is a personalized one I added there. That would be the 333 simple moving average in the monthly time frame right there. So it is very interesting because right here, you're seeing here that this is the ultimate bottom. After it touches that, it's just massive movement. And here, bottom of that housing market crisis, and so it almost never touches that line, but when it does, that is, I would say, the best buying opportunity for the S&P 500. No doubt about that. So this is going here. The worst case will be around this $1,710 for this worst case scenario. It can go even lower, a little bit lower, because if you go here, this one went lower. Okay, a little bit, but rebounded and but remember guys, if it's going to do that, then percentage wise it's going to be 64% pullback. But I would say right now the S&P 500 is not going to pull back more than 68%. Okay, why? Using the historical data we have here, when it went lower here, it was a little bit more. Let's say here in A, from this top to this low, that was around 57%. Here, that would be very drastic in today's market also, because the higher this goes, the less pullback historically it has to do, because they're in an environment where if they pull back too hard, they can crash the market completely. So remember guys, this is a market which depends mostly on depth. So I'm talking about the S&P 500 and most of the investments. So this, if they're going to crash the market, then it can't go below 70% pullback at this moment, because if it were to happen, almost every single company is gonna get destroyed. And remember guys, that those same people that do the same moves, they're not going to risk losing most of their money and also their friends' money, which will be banks and companies. So in summary, so that's what I'm saying here. If it's going to pull back, it's not going to go most likely to this ranges right here. The lowest would be here, 1,628. That's my personal view. It doesn't have to happen, but that's what history says. After it touches this red line, that's the ultimate bottom. Last time, one of the last times it did that was on October 1, 1974. The last time it happened was here, March 2, 2009. This is the monthly time frame, so the specific date, it may be off by a few days, or maybe that's the exact date. But in summary, here, that would be the ultimate bottom. And if it were to happen here, that would be the ultimate bottom, okay? But personally, I think that that's not going to happen, okay? If they pull back this market too hard, they're going to crash almost every single business, and they're not going to risk that, okay, guys? They're not going to do that. They're part of this market, so they are making money on this market, so they're not gonna crash it to the point where the other people that are help them make money are gonna lose. No, if most businesses crashes, they lose, because that's where most money are coming from, though. So that's why so yeah, guys. So here, that's right now what I'm expecting for the S&P 500, and also I want to show you guys the unemployment scenario rate right here. It's very interesting because if you add this unemployment rate right here, okay, I'm gonna delete this RSI for just a moment here. There, okay. So this is very interesting because this unemployment rate is very interesting because usually when the higher this unemployment rate goes, usually it marks a bottom. So let's use this at the meantime using the SHMITAs. So we're gonna go here. Let's see here. So here was a SHMITA here. Here was a SHMITA here. So this bottom was marked when the unemployment rate was around, let's say here, 6%, around that 6%. And that marked this bottom. Then it went higher, and this unemployment rate went lower. And then, after the massive pullback, look at that, it marked a bottom around that 10% unemployment rate. So, yeah, you're seeing the confluence here, guys, and the C-dump incident, the completely planned thing here. You see here, bottom over here, and it was here, and the unemployment rate was at 14%. And so this is indicating that when this unemployment rate goes very high, usually you will see a bottom, okay? And the SHMITA, I would say, expect a bottom for the stock market when one of the indications will be when the unemployment rate reaches more than 6%. In average, 6 to 15%, in that range. Because that would be the scenario where the Federal Reserve is obligated to put more money in the market. Because remember, guys, when you have so much people unemployed, it is less money for the market. And that is one of those key details that the Federal Reserve doesn't like to see if it goes too high. And you can see it in the charts. Harsh pullback, 50% pullback, and then you see this unemployment rate go to 6%. Very harsh pullback, 57%, and unemployment rate around that 10%. Money time, printing time. And here, massive pullback. That was, let's say, that C dump. Let's see how much was it. That was a per pullback of, let's see here. Wait. Yes, of around 36%. And then unemployment 15% unemployment rate, and boom, bottom. Money time. So this is a very good bottom indicator also. So usually when you see an unemployment rate sits to more than 6%, expect a potential bottom scenario to be very, very close, because that's what this is showing. Here, this major low was formed when this unemployment rate was around 9%. This one right here. Bull market here. And yeah, that's usually how it works. So this is a very good indicator right here for that unemployment rate. So that will be one of the other ones I already showed you guys. Okay guys, so I'm going to be talking about right now about the Nasdaq quickly here. So this will be very similar to the S&P 500 in this case. So looking at this is potentially forming, like I said before, in decade bounce scenario using the S&P 500 boom pullback, and then you're seeing that rejection around the 0.5 Fibonacci retracement, and this will be most likely a rejection around this level and continue going lower most likely because of the time frame which this takes to complete. So right now, using the Nasdaq right here, it followed very well this support here, resistance, support, resistance, support, and there. So if you go here to the weekly, let's see here, that will be the scenario. In the meantime, I'm going to delete this line. Wait, no, I'm not gonna delete that one. I'm going to, I'm gonna leave it there because it's bringing us very good support and resistance. So I'm gonna leave it like that. So right now, the potential scenario will be here. So this Nasdaq has already pulled back here, let's say here, from here to this bottom around 37%. This has more downside in my opinion right there. Also, let's see right here, this from this top to this here will be around a 41%, around almost a 42%, which would be very good for a potential bottom scenario right there. But I'm expecting this ranges for the Nasdaq right there. So this, according to the Nasdaq right here, historically, using the previous bear markets right here, I'm gonna show you guys that this had a dot-com bubble, 80% pullback, this housing market crisis, 54% pullback right there, and massive bull market right here. Up but steadily like this. And if you compare it right here, it looks something similar to this one, 80%, something this. Maybe not 80% necessarily, but it will be something to not be surprised. Let's see here. So using the moving averages, let's see here. So I'm gonna go into the monthly time frame here, just a second to see something here. So now this one is very interesting because remember when I was talking about the S&P 500 that it held this dark blue and purple line? This one would be higher. It would be using this yellow line, this light blue. As long as it held that, that yellow and that light blue, it went higher and higher and higher. And as soon as it broke that light blue, boom, just bear market right there. And here, let's see here. And here, as soon as it's broke above that yellow and that light blue, bull market right there. And look at that. Look at how interesting is that. It almost always holds that yellow and light blue, boom, 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 boom. And as soon as it breaks that, usually you have a massive pullback. So the last time that happened, it produced an 80% pullback here. And this one, this was still in the stages of trying to stay above here. But clearly, this was a massive pullback. So this needed more time and then continuation. Right here, this is looking exactly right here. This is very interesting because I used this the fractal, this red line over here, this red line, that's the same price action I pulled using this one, this massive dot-com bubble right here, and I put that same one on this top right here. It's very interesting. I'm gonna delete this purple line here. So it's very interesting because if it were to play out exactly, it would play very perfect support around there to this previous all-time to the previous all-time high of the dot-com bubble right there, which is one of those previous all-time high, one of those previous all-time highs right there. And so here at this moment, I'm gonna show you guys that this price movement, let's see here something here. So around this time there wasn't that red line, but this pink line is a 200 simple moving average. Held support. It tried to do it right here, but it went lower a little bit and then bounced back. So I'm gonna see here potential support lines. So in summary, very strong support lines will be here. I'm gonna show you guys $9,749 will be a very good support right there. If it can't hold that, then it can go even lower. But in summary, let's see here. So at this moment, the Nasdaq has already pulled back. Let's say here, using this line over here. From the price it is on right now, it is 30%. The full move would be here, 37% at this moment. I'm expecting a lower, more downside, because remember guys, this is too drastic. And this is the same thing here. Look at this. Massive uptrend, huge pullback. This is normal. This huge uptrend, and oh my gosh, look at that. It looks exactly like the dot-com bubble. Oh my gosh, look at this. Look at this, guys. Like I show you guys, in the Nasdaq, it held that yellow and blue and light blue line, and that peak euphoria, it used only this yellow line as support at that last peak. And here is doing almost the same thing. Look at this. This, boom, held support above that yellow and that light blue. Boom, boom, support. And that last peak, it held support on the yellow line. Oh my gosh. Oh my gosh. So, wow. This is indicating that this has small pullback. This is just very similar, guys. And this is, dang, man. Wow, that 80% pullback. Wow. Very interesting. So here, wow. So in regards of a percentage-wise pullback to the downside, this can go all the way down to around this pink line, around that 200 simple moving average. That will take it here, $5,264. That means it will go from here to here. That's a 69% pullback. Very interesting. Very interesting. So usually history tells us that the Nasdaq usually bottoms around that pink line, which would be the 200 simple moving average in the monthly time frame. It can go even lower right here for a brief moment, and then boom, quickly recovery. So this would be the bottom scenario right here. This is personally what I'm seeing here. This has more downside to around, let's say, I would say this range here would be a good scenario for a bottom for the Nasdaq. Okay, it can go lower, but this will be my conservative approach to this one, around these levels, for that bottom level for the Nasdaq. And the fractal, this red line over here, would take it right here, which will be in accordance. But to be conservative with this, I'm gonna say that a good support will be around this range, something like this, around this range. This will be the ultimate bottom around those levels. So Yeah, guys, that's what I'm seeing right now for the Nasdaq. So you have to watch out for that, guys. So, and remember, this was around SHMITAs. Boom, pullback. The red rectangle boxes. SHMITA time. SHMITA time. SHMITA. This was a SHMITA time, but it was around a QE moment, quantitative easing, and then pullback right here, which will be this SHMITA time. So remember, guys, that's the bottom scenario for this Nasdaq, what I'm anticipating, because it's just that's what the charts are saying historically. So hey, I follow the charts right there. So unless this Nasdaq price can't get above here, above this $13,800 level, I would say that this will remain in a bear market. Okay, a reversal will mean that this price has to make a higher high. Okay, so this means this has to go above here. See this lower highs, lower lows here. This has to form a higher high than this one. See here, this one, this price has to do something like this for it to confirm a potential reversal. It's not a guarantee, but it is a good signal for a reversal. Okay, not a guarantee, but a good signal. Those are the starting points for that reversal. So let's see here, using that analogy. Let's see here. You see, guys, it's just that's how usually bottoms work. You keep going lower, lower lows, lower lows, lower highs, lower lows here, lower highs, lower lows, until you start breaking here those highs, higher and higher. So that's why you have to watch out for that, guys. So that's what I'm seeing right now using the Nasdaq. The potential bottom scenario, what I'm personally expecting in summary, is for the Nasdaq to keep going lower. At least it has to test minimum this $9,745 right there. That will be minimum, okay, not the maximum, the minimum. So yeah, guys, these are the price targets I'm expecting. Around this would be I would say personally, a good buying opportunity right here around these levels. This. So the low here will be around that $6,763, and this range here will be $9,745. That will be a good range to accumulate for the Nasdaq if you're looking for that. Not financial advice, but according to the charts, this is what the charts say. So hey, this goes back for, let's say here, 1986, for around that. No, 1985. I remember 1985. So yeah, January 28, 1995. So this is very consistent, guys. So that's why you have to watch out. So yeah, guys, that's what I'm saying right now in the Nasdaq. Let's go into the next one. Will be the, let's say, the DXY, to see something here. So the DXY, this is something that is not that easy to follow. One of the key details will be when there's SHMITA time, you see massive uptrend for the DXY. So this one is SHMITA time, and you see this massive uptrend. The 2008, let's go here, will be here, massive uptrend because of the SHMITA, and then here the last one was on 2001. Let's see here, exactly there, uptrend. So I'm gonna delete some lines over here. There's a lot of lines. Okay, so I'm gonna delete this one. Just a second here, guys. Okay, guys, so this is very interesting because here for the DXY, this was around the year 2020, 2021. It formed this W pattern, then completed the target right here beautifully. It went higher right there. And this is looking like if it's going to do the same, so this is a bigger W pattern, which is a bullish pattern right there. Here. If it's going to complete that, then this will be, look at this. W pattern, boom. So why is the DXY? Usually when the DXY goes up, most of the good investments go down. And usually when the DXY goes down, then most of the good investments are going to go up in that case. So here, this is looking like a W pattern right here. It already confirmed. It was very, wow. Look at this, W pattern. And the target will be all the way up around this at $119 level in that case, like 911 right there. So let's see here. This already broke a parabolic curve in the weekly time frame, so that's why it's having that pullback right there. Here it held this dark blue as support until it became resistance, and boom, it break down. And also here did a dead cat bounce scenario, pullback, rejection, and lower low. So I'm gonna delete that there. So let's see, here's a second here, guys. I'm gonna show you guys in the monthly time frame. So this DXY also like follow this rising wedge pattern right here, broke down, completed the target right there. That's one scenario right there. I'm gonna delete that so there's more space here. Okay, let's see here. And looking at the DXY, okay, so this is very interesting, guys, because you see this trend line, this white line over here, this top here, resistance here, it broke, resistance here, pullback, resistance here, pullback, break up, retest a bunch of times, and now it's going higher. Very interesting right there. This one, I'm gonna delete this line over here, okay? And let's see here, delete that, and let's see here. So according to this W pattern, this is very interesting because if we pull a Fibonacci retracement from this high to this low, this W pattern has a perfect price target to all the way up around this 0.618 and a 0.65 Fibonacci retracement. And this is a very, very macro Fibonacci retracement. So that would be freaking so much resistance right there if it were to go to $119. So according to this, according to the pattern right here, which would be here, the DXY already made a good movement to the upside right here. So this may be the move, and it doesn't have to go over here, because usually if you have a W pattern and that's is the support, so when the price, which is most of the price target, so for example, if this is the price target and the price already went more than 50% of the move, then it pulls back, that may be the move. Okay, remember guys, these patterns doesn't have to always go exactly to the full target. It can just go 80% of the target, sometimes even 50% of the target, and then roll over. Right now, I would say that this move has been mostly is already played out most of that move because of the parabolic curve, and has played out more than that 50%. So this is good for the other investments in that case. This is good for the other good investments in this case. So, and here, this pattern also completed right there, which will be here, which is this one. I'll show you guys this resistance, support, and here it broke out and completed. Oh, look at that, perfectly to the target, perfectly, beautiful. And then now it's starting to pull back. So this was following up this pattern right here. which will be a asymmetrical triangle in that case. And so guys, I'm gonna delete that just a second. So there's more space, boom, and boom, and boom. So I delete that also. There's a lot of lines over here. Just a second here, guys. Okay, guys, so yeah, that's what I'm seeing mostly in the DXY. This W pattern may have that completed that full target. Using the DXY is not that easy to determine that because it's kind of random, kind of. Sometimes it's not that consistent depending on which patterns you use in this case. But in this case, this may do something like this and then do something like this, but because usually when the bottom for the stock market occurs, this DXY usually goes higher, and the stock market has more downside to go, so much downside to go, and the Nasdaq. So it will not surprise me if it did something like this. Right now, it's not that easy to determine that which scenario, but to be conservative in this case, since this, even if it did a move like this can keep going higher like this, okay? But in summary, expect for the DXY to chill a little bit and then potentially go higher because of the stock market heading lower. Usually when the stock market goes lower, the DXY goes higher. So yeah, guys, that's what I'm seeing mostly for the US dollar currency index, which will be the DXY. That is the US dollar currency index. And yeah, now guys, the Dow Jones. So let's see here, guys. So this is very interesting because the Dow Jones right here is forming a higher high. That is very interesting right here. So this Dow Jones was following up this massive descending broadening wedge. Look at this: support, resistance, support, resistance, support, resistance, support, support, resistance, and it broke out. So according to the broadening wedge, the target will be all the way up right here, which would be the previous all-time high. But look at this, guys. This didn't form that dead cat bounce scenario. It formed a continuation to the upside. Now that's very interesting. Higher highs. This is what I mean. This is a potential trend reversal right here because it went this high is higher than this one. So, but still, it would be good for this to go a little bit higher because this can count as a double top still. So here, this is most likely going to retest this, gonna pull back, retest these levels, and then continue higher. That's what I'm expecting right now in the immediate short term and mid term for the Dow Jones right here. So, and the Dow Jones in percentage wise has already pulled back from here to here, 22%. What? And from here to here, that will be a 7% pullback right now. What? Let's see here something. Wait, Dow Jones goes back all the way from, let's see which year. Dang, man. So, wow. Wow, this is so old. Wow. 1897. What? Oh my gosh. Oh my jeez. Oh my gosh. So yeah, guys, let's see here. And I did this line over here. So this Dow Jones still has more downside because this is not sustainable, and then pump and then a quickly pump like this. Dang. No, this has more downside. Has more downside. Let's see something here, guys. I'm experimenting right now. Let's see here. Let's go into the monthly time frame to see that 333 monthly moving average. This will be very interesting. Wow. was so massive, that pullback. Oh my gosh. Look at this bottom, 1995, bottom again, 1980, bottom again here, 1982, almost reached here around that 2009 time frame. And yes, this is still potentially the worst case scenario using this 333 monthly moving average. So so according to this, let's say here, see something here. Okay, let's see here and there. So no, this has more downside to go. So here, guys, looking at this Dow Jones, I would say, has to minimum reach here to this 0.5 Fibonacci tracer on this 27,571 right there, for that to be a good scenario for a good pullback. And still, that doesn't mean that would be the bottom, because from here to that 0.5, that would be 25%. Dang, it's 25 only. Wow. But to the golden pocket, that would be around 33%. So wow, right here during the dot-com bubble, this Dow Jones pullback, let's see here, 38%, and here it pulled back 54%. Wow, very interesting right there. And here, because of this massive move like this, the bottom let's see, it's very interesting. Okay, so right here, this will be a pullback from this top to here, 32%, and also it coincides with that 100 simple moving average in the monthly time frame. Usually the bottom for those would be below this 200 simple moving average, but wow, it's not that easy to determine in this case. Like I said, guys, the worst case scenario will be this one, around 14,600. The worst case scenario will be $14,766. Doesn't have to go there, but it will be a very good buying opportunity according to the charts. That is not financial advice. That's what the history tells, that's one of the best buying opportunities. So I will just keep it very summarized. Very, very good bottom indicators will be using this red line and this pink line in summary. Okay, the pink line will be the 200 simple moving average in the monthly time frame, and the red line will be the 333 simple moving average in the monthly time frame. Okay, let's keep it very summarized like that. And let's see here, that will be the ultimate, that will be the scenario I'm looking for this Dow Jones to go all the way down around these levels. That will be the level, because of the artificial depth, which is not value right here. Most of that is depth. This move to the upside, that is mostly depth and not true value in regards of normal growth in the Dow Jones. So it's very interesting for this Dow Jones. Okay, so to summarize this, if it goes, okay, so this will continue this will resume a bull market. I would say right now, if it resumes above this $35,475, if it goes above this here, that I would say that this will most likely continue going higher. Okay, so that would be the dead cat bounce scenario, which has been invalidated right there. and this will be the other potential dead cat bounce scenario, which will be here, here, and here. And this is very interesting because even this one is going higher here. Wow, very interesting. So I'm gonna leave that there, but I'm gonna delete this just a second because I'm going to go from the previous all-time high to see something here and there. Let's see here. Very interesting. This one, look at this, guys. It's having a lot of confluence there. This may be the dead cat bouncing it right here, maybe. Okay, if this goes higher, then like I said before, $35,485, and expect this to most likely retest the previous all-time high and most likely keep going higher. But what I'm expecting would be rejection around here, continue going lower, because this is too much, too fast, too much. Look at this. From here to here, 20%. That's insane. That's insane for a stock, a Dow Jones stock. A bunch of stocks in one. So yeah, guys, this is what I'm seeing here for the Dow Jones right now at this moment. And like I said, a very good potential downside bottom indication would be, like I told you guys, around these levels. Pink line around this range. I'm expecting that around this range. I'm expecting between minimum, I'm saying minimum, not the worst case scenario, but minimum, I'm expecting from $18,602 to here to $20,298 for the Dow Jones right there, for the bottom indication. And that would be a percentage move downside to, let's see here, 45%, 49. Yes, I would say that because this is just too much. This option is just too much to the upside. This has to have something like this and continue going like this. So yeah, guys, that's what I'm expecting right now for the Dow Jones. And the worst case scenario will be around this $14,742, and a little bit lower. That can be even $14,000. That has beautiful confluence with this top right here, this top of the 2008 housing market crisis. So yeah, guys, that's what I'm seeing right here. Support here, that would be the worst case scenario around that $14,179. So yeah, guys, that's what I'm seeing right now for the Dow Jones. So yeah, guys, that's what I'm seeing here right now for the Dow Jones. Okay, guys, so let's go into the cryptocurrency total market cap right here, which will be in the monthly time frame. You see here, guys, that I'm going to put some Fibonacci retracement. So I'm gonna tell you guys here how this top was made. This top right here, pull from here to here, and look at this, guys. There, just a second, I'm gonna put this into the Fib settings right there. And beautiful. Look at that, guys. Put it here and the top. Beautiful. And that was the bottom perfectly to the Fibonacci extension of that 1.618 Fibonacci extension. Pull back, rejection here, and then confirmation of the golden pocket right here. Went higher than this high, price discovery, and top out exactly there, and boom. Beautiful. So yeah, that would be the one of the best indications for a top. Like I said before, the 1.618 extension right there. And also, if you go into the RSI, which I'm going to show you here, it will be here. Top right here. You see this top? I'm gonna show you guys quickly. This top was followed here around this, but you had all of this time to sell between here and here, and then pull back. Top right here, which will be here, went higher, but hey, boom, pullback. And so a good selling indication also will be in the monthly time frame for the total cryptocurrency market cap will be a 93 level for the RSI. That will be a very good time to sell for the future events. And here you're seeing here, guys, that this cryptocurrency total market cap is holding very good support at this moment right here for the previous all-time high for the total market cap of the cryptocurrency market right there. So it's very interesting because this top was around exactly $3 trillion. And that same top happened for the dot-com bubble. It literally topped out at $3 trillion. And then what followed up was a 50% pullback. Wait, 50%? No, 85% pullback around that level. 80% to 85% pullback for the NASDAQ during those times. Amazon lost 95%. Amazon lost 95% during those times. Imagine, and they were doing very good during those times fundamentally. So that's why you have to first look at the price, combine it with the fundamentals, because usually both are not synchronized every single time. So you may have very good news, very good fundamental news, and the price for just keeps going lower. So that's why it's not the same looking at the fundamentals and also the graphs. You have to know both and then combine them. So that's what I'm teaching you guys here. So awesome. So here, guys, I like to teach more in regards to the charts also, and also I like to teach more about the fundamentals. So in this case, this is very vertical. So looking at this, like this, see here, usually when you see this massive uptrends, usually this has to go at least to this 0.5. That will be around $569.49 billion right there. Okay, that would be a very good scenario for a bottom for the cryptocurrency total market cap around that level. Okay, I'm expecting more downside, okay, because this is too much. This has more space to go to the downside, especially when you have this massive bearish divergence. That's just insane. Look at that. Higher highs here, lower lows. That and also this is the monthly time frame. This is insane. This has to go more to the downside. And also another reason, let's see the percentage wise pullback. So from here to here, this is at this moment a 73% pullback, but the ultimate right now, it has already gotten 76% pullback. If it were to go to that 0.5, then that would be an 81% pullback, which coincides with that NASDAQ pullback. And that means Bitcoin has more downside, which I already mentioned before. I'm expecting more downside for the Bitcoin price. So it makes so much sense for that to happen. So yeah, this has more downside easily. When this starts going into that 80% pullback from its previous all-time high, then I would say that during that time, that would be a very, very good scenario for the bottom. So this coincides with this 0.5, which would be this half movement of this massive movement. Half of that movement will be here. And that would makes so much sense. Usually when you see parabolic moves like this, it likes to retest at least this 0.5. And it can also go lower, but I would say that the minimum would be 0.5. The worst case scenario would be all the way down around here, this golden pocket. That would be the worst case scenario. And the very beautiful thing is that this has perfect confluence using the bullish Fibonacci retracements and also the bearish Fibonacci retracements. Both has perfect and very good bottoming support levels around this. And that will be all the way down. The worst case will be $339.33 billion. That would be so funny if it were to do that. that would be the best buying opportunity of a lifetime for the cryptocurrency market as a whole. In my perspective, my opinion, it's not financial advice, but according to the history. So, yeah, man, it's just wow. That would be insane, man. Oh my gosh, if that were to happen. Oh my gosh, it's wow. Dang. So yeah, guys, that would be the worst case scenario. Let's see into the simple moving averages. And so right now, the cryptocurrency total market cap is doing for this first time potentially. It's going to close potentially a monthly body candle close below this dark blue and this purple line, which the dark blue the dark blue is the 50 simple moving average in the monthly time frame, and the purple line is the 55 simple moving average in the monthly time frame. So this is the first time potentially that's going to close a monthly body candle close below this dark blue line and this purple line right here. It never done that before. It always held as support using the history right here in the monthly time frame, but I would say most likely this is going to lose this support right here and it's going to go lower. That's my personal view. That's what I'm seeing right there. Okay, this has more downside, like I said before. This is too much. This has to cool off, and this percentage move, let's see here, from here to here, that was an 88% pullback. Oh my gosh. And if it were to do the same, let's see here, 88 would be perfectly to that golden pocket. Look at that. Oh my gosh, that's insane. That confluence is so perfect. Oh my gosh. What? That's insane. Okay. So I'm not saying that it has to pull back 88%, okay? Because remember, 88% was because of this massive, that was massive. If you compare this massive uptrend to this one right here, it is not the same move in regards of the similarities of how high it went. So this one was less euphoric in regards of the price action compared to this one. So yes, I would say this had more euphoria, but remember, diminishing returns means that usually the higher it goes, the lower gains it will make as time passes. So this is just very interesting, guys. Oh my gosh. So I'm not saying 88% pullback is going to happen, but I would say right now that would be the worst case scenario. Okay, 88% pullback would be the worst case scenario right now, and I'm looking for that 80 to 80% pullback for this to bottom out right here. That's what I'm expecting. Let's see here, and that is, let's see here, 80%. 85 will be here. Dang. So yes, I would say between that 80% to that 85% pullback, that would be most likely with almost a guarantee the bottom using the chart history. So wow. It's so beautiful right here, guys. So summary, I'm expecting more pullback, at least to this $604 billion level. And that means it would be another pullback from here to there. That would be another 28% pullback in the whole cryptocurrency market. And yes, that can easily happen. Like I said before, massive movement. This has to at least go to this 0.5, and that will confirm a pullback from the previous all-time high to here. to around 81%, which also makes sense. A minimum, that's what I'm expecting right now. And if it wants to do the worst case, which can happen, but I'm leaning more forward into that 81% pullback. Okay, this is the worst case, exactly to that golden pocket, both in the Fibonacci retracement in the bullish side and the Fibonacci retracement into the bearish side. That would be perfect support right there. And it also makes sense because of this wicks right here, which didn't get retested. This golden pocket. This would be a nice place to retest also, because of this wicks didn't get retested before going higher, which also confirms that to be a most likely scenario, a likely scenario, not the most likely. The most likely scenario will be an 80 to 81% pullback. So yeah, guys, expect most likely, I'm expecting 80% to 81% pullback for the total cryptocurrency market. Okay, guys. And yeah, guys, that in summary is what I'm seeing here for the cryptocurrency total market cap. That is in summary what I'm seeing for the cryptocurrency total market cap. So yeah, guys. That's what I'm seeing here for. So yeah, guys, that's what I'm seeing here in summary for the total cryptocurrency total market cap. So yeah, guys. Thank you so much for watching this YouTube video, guys. This is a very long video, but I wanted to do a very condensed and very in detail view in the overall market, because it's very important, guys. These views I'm sharing with you guys are what I'm seeing here and what I'm expecting to happen. Okay, it's not a guarantee, but according to the charts and the way I analyze this, usually it comes into fruition. Okay, doesn't have to happen every single time, but usually it does. And you can use my previous videos as before as reference. Also in the SHMITA updates and the Bitcoin technical analysis updates. So yeah, guys, if you enjoy this video, leave a like, comment, and share this YouTube video with your friends. Also subscribe to my YouTube channel, Crypto Solutions, if you haven't subscribed yet, guys. And also, guys, click the bell notifications to stay ahead in the cryptocurrency market and also in the overall markets using my technical analysis YouTube video, guys. And also, guys, thank you so much for watching this YouTube video, guys. Have a nice day, guys. Take care, guys, and peace out, guys.